Hello, I'm Sophia Besch, and this is The World Unpacked. This week on the show, we're talking about the politics of clean energy technologies and the global struggle for clean energy dominance. Over the past decade, China has emerged as a powerhouse here, producing the majority of key clean energy technologies. What does this mean for the United States, for its allies, and for the race towards net zero emissions? My guest today, Milo McBride, argues that clean energy systems are critical products that will define America's geostrategic future. Milo is a fellow here in the Sustainability, Climate and Geopolitics program at Carnegie and the author of the paper Catching Up or Leaping Ahead: How Energy Innovation Can Secure U.S. Industrial Stature in a Net Zero World. In this episode, we'll talk about the strategies the U.S. could and probably should deploy to compete in the clean energy revolution. We'll explore how innovative technologies could not only help close the gap with China, but also redefine America's role in the global energy landscape. We'll discuss how the incoming Trump administration might approach the race for clean energy dominance with China, and we'll talk about what this all means for America's allies. So let's get into it. Milo, welcome.
Thank you. Thanks for having me.
Great. So, Milo, China produces the majority of key clean energy technologies. 60% of EVs, 70% of wind turbines, 80% of solar modules and battery cells. They also have a significant lead on new nuclear power and green hydrogen. Why is that a bad thing? Should we not be glad that China is deploying technologies that might get the world closer to reaching net zero goals?
Well, I think that's an important framing. In the context for this global challenge of wrangling our carbon emissions, we've seen pretty revolutionary cost reductions in a lot of these technologies. 90% reduction in the cost of solar photovoltaic, which of course, a lot of which has to do with China's economies of scale. And as you mentioned, it's not just these legacy technologies, wind turbines, solar panels, batteries, but also next generation ones, the ability to produce green hydrogen, to decarb our industries, the ability to produce nuclear power, which the United States has effectively stopped doing for the past couple decades. There's been one reactor in Georgia recently. So in terms of wrangling our carbon emissions, this is positive news. There's some analysis out there that suggests China may even plateau their domestic emissions ahead of schedule. This also means for emerging and developing countries access to cheap, clean energy products that are a part of their development strategy. So that all said, it is positive. But for the United States, the world's largest oil and gas producer, the world's largest net carbon emitter and historical carbon emitter, this poses a challenge, especially as these technologies become increasingly cost competitive to incumbent fossil fuel products, which we dominate today.
Okay, so let's talk about how policymakers in Washington have responded to this challenge, are responding to this challenge, and why you think they might not have it quite right yet. So we've seen the United States deploy industrial policy at an unprecedented scale in order to be able to compete with China, to secure U.S. Supply chains. I'm thinking of the IRA here predominantly, correct me if I'm wrong, the Inflation Reduction Act. Walk us through maybe the thinking behind a massive package like that and why it might not be the right approach to the challenge you lay out in the future.
So, as you say, over the past couple of years, we've seen unprecedented levels of industrial policy, both the Inflation Reduction Act, which you mentioned, but also the Bipartisan Infrastructure Law. And those policies took an all-encompassing approach to throw grants, loans, tax credits at onshoring the production of these energy systems and some low-carbon industrial processes. I think in general, there is an argument to be made that you need to start with an industrial base. Some of these sectors are really starting from scratch. But what I argue in my report and what I offer to policymakers, not just in the U.S., but in other countries, is that this all-of-the-above approach to onshoring, especially incumbent technologies that the Chinese already produce at scale, may not be a winning strategy to produce long-term, competitive, and durable industries for low-carbon growth. And that's really the goal here. We don't want to have subsidy-reliant industries that are dependent on tariff walls. We want to have innovation that can drive forward domestic industries and can also accelerate the efficiencies of low-carbon technologies, right? And I think that's the third way that I try and offer in this paper.
So when you're saying we shouldn't focus on onshoring incumbent technologies, what you're saying is the U.S. shouldn't invest these massive resources in trying to reproduce and produce in America the technologies that China already has an advantage on.
In essence, yes. And I think there's perhaps an emotional reality here, which is that a lot of these technologies, crystalline silicon solar panels, lithium iron phosphate batteries, that today are dominated by Chinese companies, were produced and incubated in U.S. universities, U.S. firms, and they were lost. And perhaps some of the strategy that's been taken has been this knee-jerk reaction that we need to regain what we lost. But part of this strategy going forward is accepting where technological advantage, access to the machinery needed to produce these technologies is simply not here, but that other next generation advancements may be brewing, and we should give those a focus, especially ones that offer the U.S. and other nations that have them the ability to prove competitive, but also to supplant some of the supply chain risks that these incumbent technologies come with.
Okay, well, I do want to talk about the supply chain risk that you bring up here, but I noted down a quote from your paper that I liked. You talked about the risk of technological complacency if innovation isn't prioritized in the U.S. approach. Can you talk a bit more about what you mean by that?
Some of these incumbent technologies do a decent job of getting low carbon products out the door and into the market. But they are not the end game of technological travel. There are possibilities that are emerging to do a heck of a lot better.
Give me some examples.
Absolutely. So today's solar panel efficiencies max out at 20 to 25%. There are next generation panels known as perovskite cells that are emerging, namely in China, that could get us to 30 to 40%, so double efficiency. Today's battery technologies are, whether iron phosphate or nickel cobalt, have a limited driving range in electric vehicles compared to what are known as solid state or semi-solid state batteries that could boost enormous driving range. For example, the Chinese have a luxury EV that can drive 12 hours straight on one charge.
Oh,
right?
wow.
That is a step change, and there is little in the way our industrial policy is crafted to incentivize the risk takers that have this technology, but perhaps don't have the financial or political capital to back them and support them. Many of these firms are startups and trying to enter the market that's saturated by the incumbent.
Got it. Okay. So what you're saying is industrial policy is the way forward, is going to continue to be the way forward, but innovation is key here. The way that we shape our industrial policy needs to change.
I think that's well put. Instead of thinking about solely protecting our industries with tariffs, which I do see is how we lock into technological complacency, we need to be focused on this pipeline to nurturing new ideas, new intellectual property, likely in the form of startups, nurturing them to market and helping those opportunities compete with incumbents, even in their respective sectors.
Okay. So then the question is, where should the U.S. focus its efforts, focus its money? What type of technologies offer the kind of opportunities to actually leapfrog ahead of China, which is the goal? I mean, in your really excellent paper that I recommend all our listeners check out, you provide a whole list of technologies that have the potential to alter dynamics in clean energy and traditional industrial sectors. In this podcast, we're necessarily going to be able to scratch the surface here, but I do want to discuss some of the technologies and sectors in more detail. So, I mean, I wonder if you are maybe a bit tired of talking about batteries, but do talk to me about batteries, because that, I think, is where most our listeners are first going to think about when they think about the clean energy technology of the future.
And with good reason. Batteries are essential technologies of the 21st century. They will define how we move around in the world. They are key demand drivers for critical minerals. And they have dual and triple use opportunities for nations that have advanced battery technology. I highlight batteries as an opportunity to leapfrog ahead. One, because some of the technologies that are being incubated in the U.S. Do not require the vast and comprehensive mineral supply chains that are dominated by China. And over the past couple of years, the Biden administration has tried to put forth both domestic and foreign policies to abate some of those supply chain risks. And I will say cautiously, too little avail. Most of these supply chains, the chemical processing, the extraction, are largely still dominated by Chinese firms. So the alternative strategy I suggest is that the U.S. really consider the high opportunity in technologies that not only offer these generous driving ranges that I expressed previously, but that also can phase out the need for some of the chemicals that pose mineral choke points. And I think the particular one here is graphite. And this is timely. It comes after last week's announcement from the Chinese Ministry of Commerce that there will be more stringent export restrictions on graphite products from China to the U.S. And it's an area where there are few alternative supply chains being developed, right? There's one in Mozambique, there's one in Quebec. But fundamentally, what I offer is that the U.S. should look towards replacing graphite with lithium. This is known as a lithium metal architecture. And the U.S. has no issue producing lithium. We have enormous supplies of this stuff in Arkansas, in California, and it can be extracted much like oil through a process known as direct lithium extraction. It's not invasive like hard rock mining. So there's no supply chain risks in the lithium sector, and we should see a type of synergy between that more sustainable and geopolitically sustainable way of extracting lithium and batteries that just demand more lithium over graphite. The last thing I'll say is that the U.S. has a unique type of technology that I highlight in my paper called lithium sulfur. It is a type of battery that just requires lithium. It also needs sulfur, which is an industrial waste product, essentially costs nothing to procure. But if you think about that type of chemistry from a geopolitical lens, if you can advance that system, which is doing quite well, there's been some interesting developments in the past week, then we not only simplify the domestic supply chain, but if that battery can be commercialized, you negate the importance of Beijing's most important mineral choke points. And I think that's an interesting way to think about a type of asymmetric economic approach to the battery mineral issue. Instead of sending Western mining giants out to extract niche and illiquid minerals, which are, quite frankly, not going to be very economically enticing, maybe you think about alternative demand drivers that just negate the importance of some of these leverage points altogether.
Fascinating. You did a really good job summing that up. Thank you very much. I don't think I actually have follow-up questions on batteries. You've clearly done this before. So I want to just briefly get into where you see the U.S. advantage in the different sort of legacy renewable energy sectors. In your paper, you talk about wind, you talk about solar, you talk about nuclear energy, and how the U.S. might actually struggle to catch up with China here. So talk to us about that and break hearts in our audience.
Oh, it's
and
hard.
Then talk about what that means for where the U.S. should put its efforts instead.
I can run through it real quick. I think the macro takeaway is that some of the industrial advantages are unprecedented and outstanding. And it poses a difficult challenge, perhaps outside the lens of this research, about what supply chain resilience for those products looks like in the long term. Just a quick overview. The Chinese have enough solar capacity alone in pipeline to meet global net zero goals, right? From a market saturation perspective, there's not going to be a lot of opportunity to break into that. As I said, there are efforts and perhaps need to develop alternative, de-risked supply chains you see emerging in the likes of India and across Southeast Asia. But that's a unique level of industrial advantage and dominance. The wind sector, of course, has been a historical place of American and European advancement. The Europeans, Danish in particular, have accelerated offshore wind development, and I think to the surprise of many, the Chinese have moved ahead in remarkable ways. Just for context, Western wind manufacturers are struggling to develop new offshore wind turbines in the range of 15 to 20 megawatts. These are enormous turbines, perhaps the size of the Eiffel Tower. The Chinese developers are moving forward with deploying 20 megawatt plus turbines out at sea that float. And they're expanding into new markets in Italy, in Vietnam, as Western manufacturers are pulling back. And I think there's a similar story there with nuclear. As you said in the beginning, over half the world's new nuclear reactors are being produced by China. And the potential for the U.S. to realistically compete there is difficult outside of a very long-term time horizon and with security-aligned partners, let's say. I find the only area that the U.S. can fundamentally compete on power generation and drive a durable industry is in advanced and enhanced geothermal technology.
Geothermal energy, geothermal technology, just quickly for those of us who are not sure what that actually means, we have a clearer picture of maybe wind, solar, nuclear. What does it look like to extract geothermal energy?
Yeah, and in principle, it's a technology that's been around for 100 years to use the Earth's heat, naturally reoccurring heat, to produce electricity. But it's been confined to a very niche type of resources. You could say it's a Goldilocks resource with a good amount of water and a good amount of heat. And that together creates naturally occurring steam to propel a turbine. We see it in places like Kenya and Iceland, here in Nevada in the United States. But it's an incredibly niche system that in the past couple of years, its potential has been expanded by advancements in the U.S. oil and gas drilling sector. And these advancements open up the potential for geothermal energy about 140-fold from what they once were. And it's an exciting opportunity, one, to produce clean power, but also to produce what we could call firm or flexible power, the ability to always be running and to ramp up or down with intermittent renewables. We've seen some strong signals in the U.S. with these new systems. Data centers procured by big tech companies are already enlisting some of these types of power plants to be built. We're also seeing moves from the United States Air Force at the Pentagon to procure these systems on military bases because they offer an opportunity for energy security. There's no need to refuel a geothermal power plant. It's always running, and it can produce both heat and electricity. And I think most interestingly is this idea of how the U.S. can play to its strengths. We don't have a lot of PhDs who understand battery cell chemistry manufacturing. There are some, but that's not an area of labor strength. We have hundreds of thousands of oil and gas workers who are familiar with this type of process, who understand the subsurface, who understand geology, who understand the same types of drill rigs that geothermal uses as in oil and gas. And I think that's a clear opportunity down the line of how we create a durable industry that leverages labor force and doesn't work against perhaps some of our vulnerabilities.
Fascinating. All right. We've taken some time to discuss the state of U.S. clean energy technologies. Next up, after the break, we'll get into some policy recommendations and especially politics, how the U.S. can best manage competition with China over clean energy technology, what you expect from the incoming administration, what this all means for China and for U.S. allies. We'll be right back. Thanks for listening to The World Unpacked from the Carnegie Endowment for International Peace. If you enjoy the show, make sure to check out other audio series and podcasts from Carnegie. Subscribe to Carnegie podcasts on popular podcast platforms such as iTunes, Stitcher, or wherever you listen to podcasts. Now back to the show. And we're back. So, Milo, I want to talk about what kind of policies are needed to make sure that American clean energy tech can actually move forward. And I'll put you in the beautiful position of you actually in the White House, able to design this policy, and we'll leave politics aside from now. You've discussed some of the clean energy technology that is currently being developed in the U.S., all very different. But as you write in your paper, what unites them is the predicament of being at pre-commercial stage. So what would it take to leap ahead now? Do we need another big clean energy bill? What does this look like?
In essence, there are several types of policies that could be enacted to help push these technologies to market. that wouldn't necessarily require massive fiscal spending in the way that we've seen over the past couple of years. I talk about the opportunities as we move into a world of tax credits. Are there ways to offer an additional type of tax credit to the next generation over the incumbent? And obviously, it could be designed to sunset so that it's not an ongoing system. But that's one way. There's also harder political decisions about what types of technologies qualify for existing tax credits. If we keep it very loose, we encourage the incumbents. This is particularly complex with the battery sector, and I won't go down that road. Folks are welcome to read the paper and dive into it. And then I think there's further work to be done that we've seen great strides forward in advancing the so-called bridge to bankability. And that's essentially just giving government grants to help build a first-of-a-kind project. And that's one of the major hurdles here.
The bridge across the valley of death.
The bridge
towards bankability.
Towards bankability. And there's multiple valleys of death in this process, coming from a lab with a great idea to a startup raising equity to then actually building a factory to do that thing. That's a huge risk. That's probably the biggest risk in some way. And it's something that is at an awkward stage for investors. VCs don't necessarily want to invest in that first factory. Infrastructure investors maybe don't want to invest in that first factory. And there's a game of hot potato that you see of people trying to balance that risk. And it's an area where government could come in, not with huge sums of money, but decent amounts of grants to help just de-risk that and get that first one off the ground.
Okay, so I want to talk about the international dimension of this hypothetical approach that you outlined, because you say in your paper that the U.S. should leverage partnerships with allies to counter Chinese dominance in this sector. What does that look like in an ideal world?
In an ideal world, you could see it at different stages. For technologies that are still nascent and need R&D, you could envision some type of diplomacy for science where relevant diplomats coordinate on how they can get universities, national labs to share information on areas where there is research advantage. You could see this perhaps existing between countries that have a joint interest in advancing new types of geothermal energy. Italy, New Zealand, Iceland, Kenya. You could see this perhaps with already existing architectures. The quadrilateral security dialogue is an interesting one to think about, especially given its nonpartisan durability, where certain sectors of advantage, perhaps solar, perhaps mineral extraction, could be explored as areas to define how that type of cooperation can collectively advance research, can advance commercial development, can advance joint ventures. And as I'm saying this, I'm moving towards more commercially viable ideas and what we do with that. And I think the United States is starting to and can further leverage its trade delegates, its foreign financing entities like the Development Finance Corporation, the Export-Import Bank, the U.S. Trade and Development Agency, to start to promote some of these technologies. And we're already seeing it. We're seeing the first ever U.S. long-duration battery, which is another exciting area of U.S. potential advantage, being potentially exported to Ireland, came out in the news recently. We're seeing some of these geothermal technologies beginning developments in Kenya and the Philippines. So how do you think about trade policy beyond the kind of tariff policy, but the actual promotion of industry and trade to advance and create a demand pull for some of these opportunities and areas of strength?
Really interesting. It's the second time that tariffs have come up, and we're still not quite there yet. I want to still dwell a little bit in think tank land and talk about what a bipartisan compromise on the approach that you outline in your paper and in this podcast here could look like. I mean, The paper was written before the elections, but you've started thinking about it then already. And you talk about, I thought it was interesting, sort of the bitter pills that each side of the political aisle in the US might need to swallow in order for something like this to move ahead. So talk to me about what that could look like.
I'm fortunate in that the technologies that were the results of this paper's analysis and that showed the potential for industrial strength, I do believe are potential areas for bipartisan consensus around geothermal, about low carbon heavy industry. That's one we didn't discuss, but there's strong opportunity in the US and really interesting developments on Capitol Hill. So I do think that regardless of what happens going forward, some of these technologies will maintain their opportunity. In a vacuum, again, both sides probably need to concede on areas of discomfort. The ones I outline are the left potentially conceding on its support for the legacy permitting system, which makes developing a new factory or a new geothermal power plant cumbersome and difficult, especially for small industries. And the right may need to concede its aversion to risk. There was a DOE loan that failed famously in the 2010s in the Obama era for a solar manufacturer. And I think we're partially stuck in an era of seeing this type of failure as problematic, when in reality, we probably need to get more comfortable with weaker industries failing, even if they've been backed by the U.S. government. And we see that in the defense sector, with DARPA's investments. Not all DARPA investments succeed. And thinking about advanced energy technology in a similar way is maybe in our best long-term geostrategic interest.
Okay, so now let's get into the actual politics that these proposals are facing today. So what do you expect? I guess we'll start here. What do you expect will be the position of the incoming Trump administration on these issues? And, we know a little bit, we're obviously trying to forecast and predict here, but we know that they take competition with China seriously. We know that they take a different approach to industrial policy in general, focused less on subsidies and more on tariffs. And we know that maybe clean energy technology is not their highest priority when it comes to climate and energy policy. But where do you see the Trump administration's position?
I will caution it is a difficult crystal ball to read of exactly how and where the incoming administration will alter present industrial policy for these advanced energy technologies. No matter what happens, the Inflation Reduction Act is going to get a haircut. And that's going to be in part to help fund the tax cuts from 2017, and in part to readjust the fiscal priorities with the administration's energy strategy and industrial strategy writ large. The key questions right now are, to what extent do tax credits get repealed? There's a couple scenarios. One is that there's a unilateral repeal, and we see the rug pulled out from under a lot of companies. This will be a severe scenario. It will result in stranded assets, especially of green jobs in red states. It'll mean that the battery belt, a wave of battery factories, is in the red, and that a bunch of the subsidies that industries across Detroit, Silicon Valley, and New York hedged on are not going to get the incentives they thought. It's a disruptive and unlikely but possible scenario. The second one is some type of alteration to the tax cuts to mandate a more stringent approach to domestic content and against Chinese industry and inputs. And that's an area where you could see the Trump administration leveraging its approach on China, its interest in a U.S. industrial base and American jobs, to craft a policy that does have some losers and winners, but will force those that invested in domestic and friend-shored supply chains to come to the forefront, and those that have exposure to struggle. I will caution some industries will really struggle with that more so than others. Complex questions will emerge. If you're a manufacturer for solar or batteries, can you buy the machinery in your factory from a Chinese company? Where else do you get that machinery, right? The logistics of this could be difficult. But I think that's one thing that people are talking about here in Washington. And then the other scenario perhaps seems less likely too is that much of the subsidies are kept in place. There are some unique alterations, and that the green growth that it's driving has the political longevity and salience that the Biden administration hedged on. I don't necessarily think that's going to happen, and I think the middle ground is probably the most likely.
Which will lead to complicated and possibly expensive decisions for those firms that we're talking about here.
Absolutely.
Yeah. I just want to quickly look to what these paths that you've just outlined, perhaps particularly the middle and most likely one, what that would mean for, well, first for China. If I'm in Beijing right now, is the Trump administration good news? Are they as interested in, the geopolitical competition over clean energy technology with the U.S. as you are?
I think fundamentally, both policymakers in Beijing and the leaders of Chinese corporates are going to continue to do everything they can to expand their market share, expand their pipeline of manufacturing, diversify that pipeline, regardless of what the Trump administration decides to do. And a policy of containment, whether through domestic tariffs or trying to incentivize others to diversify, is going to be difficult, especially just given the economics of how cost-effective Chinese technology is today. We've seen some pretty interesting developments of Chinese diversification in the past year or two. Wind factories emerging in Kazakhstan and Brazil, solar factories, Chinese solar factories emerging across the Gulf, and battery and EV hubs in Morocco, in Hungary, in Brazil as well. So the corporates are aware of these volatile trade dynamics, and they are taking a stake right now to ensure access to various markets. And I think the sentiment of their importance is echoed at the highest levels of Chinese politics. You see Xi Jinping talking about the new three, solar, batteries, and electric vehicles, as important growth drivers as China diversifies away from a property-led and construction growth model. So those will be critical questions. And I think one thing I'm curious to watch is the extent to which Chinese policymakers try to help stimulate foreign demand for these products. There was talk at the Chinese Central Bank of a green Marshall Plan. Of course, this echoes the piece in Foreign Affairs from Brian Deese, where the Chinese have the production capacity. In fact, they have an overcapacity issue. So are there mechanisms that we could see to help subsidize the imports in other countries of said overcapacity? I think that's a major area to consider, especially in emerging markets where access may be a little more difficult.
And then, is there a region, are there countries that might pick up the mantle from the U.S.? And if you're looking for policymakers to pick up on your recommendations, are you looking across the Atlantic now? Are you looking to the Europeans, for instance? Is there potential there for innovation? We've just recently had the Draghi report, which gave a fairly pessimistic view on the future of European competitiveness. At the same time, Europe is a region that clearly takes the issue of renewable energy and the future of clean energy very seriously. So how do you look at that?
I do see there is opportunity, and that's fully acknowledging the various difficulties that Europe faces, whether fiscal, whether the need to spend on other sectors like defense right now. But the reality is the European Union has made very clear its direction of travel with regard to energy and climate policy. And at the same time, it faces, as you say, a competitive crisis. And you see that particularly right now in the auto sector. There was recently a collapse of what was presumed to be a national champion for the European battery sector a couple of weeks ago.
In Sweden.
In Sweden, correct. And they had assets in Germany as well. And this all to say the Draghi report comes at a prescient time, where if Europe is going to become this net zero leader, and it is going to ensure value-added industry inside the single market, which there is political economy reason to have, what are those sectors that it can prove competitive? What are the next generation advancements emerging in Europe? And how can European institutions like the European Investment Bank help stimulate those types of investments in those technologies? And then, of course, there are larger macroeconomic questions that are beyond the scope of this, but how do you deepen capital markets to help some of these early stage startups not just get a first round of investment, which you see from Europe, but how do you deepen that so they can become mature with European capital and within European institutions? That's, I think, a big question that European policymakers will be thinking about. The other one is whether in that most severe scenario in the U.S., we're going to have stranded assets here. Will there be opportunities to reabsorb some of the IP that goes defunct in the U.S.? There was the reverse a couple of years ago.
Very ironic.
Yeah, it is very ironic.
Yeah.
And it's all to say, we can talk, to get into this idea of what is good industrial policy. We could talk about innovative tax incentives and IP law, but at the end of the day, having demand certainty and having the political certainty and clarity that that's going to be the direction of travel does a lot to ensure that an industry can thrive.
All right. So at this point of the show, I like to ask our guests what book, what paper they would recommend to our listeners to better understand this issue. Milo, please feel free to recommend your own paper. We've been talking about this for a while now. Or if you have anything else, then I will.
Well, I do recommend reading the analysis. It is comprehensive and really looks at a myriad of sectors across the United States.
We'll make sure to have that in our show notes.
Awesome. And perhaps less pragmatically, I would also recommend the book Collaborative Advantage by Jonas Nahm, who recently left the White House and wrote this fantastic deep dive on the past decades of how the industries that I talk about, wind and solar manufacturing, emerged in different countries and the various political circumstances and economic circumstances that drove their maturity. It's a great read and definitely recommend it to the viewers.
Excellent. Milo, it was a pleasure to have you on The World Unpacked. We look forward to having you back on the show in the future. Thank you.
Thanks so much, Sophia. Pleasure to speak with you.
You have been listening to The World Unpacked, an audio production of the Carnegie Endowment for International Peace. Views expressed are those of the host and guest panelists and not necessarily those of the Carnegie Endowment for International Peace. Subscribe to Carnegie podcasts on popular podcast platforms such as iTunes, Stitcher, or wherever you listen to podcasts. You can find our episodes on Carnegie's YouTube channel as well. Learn more at thecarnegieendowment.org. Thanks to the excellent Hyewon Park, who is our audio engineer and executive producer, and to Cameron Zotter, who is our videographer. I'm Sophia Besch, Senior Fellow in the Euro Program and host of The World Unpacked. Thanks for listening.